Welcome to 13 minutes of news in 13 minutes or less. Here we go. A couple things to bring up real quick. I'm feeling much stronger. Back from COVID, teeth aren't hurting near as much. Things are on the mend. Those two together sucked. So this week did a lot of things. 2-year anniversary of the audio podcast. And I put a audio podcast version up on YouTube today, so you guys should go check it out. It's not the normal video, but the sound is better because it's what I do for the audio podcast. But we also had the Long Island Dash Experience, Lou and Mary. That was a lot of fun. Go check that one out. Had Matt Spoke, from the CEO and founder of Moves Financial. Now commonly known Moves, but they are movesfinancial.com. But check that out as well. That's a good gig worker tool. You guys should check that out. And Thursday we had Metrobi on the roundtable, the CEO and founder. Last mile services out of Boston, New York, Washington, D.C., Chicago, Denver, Los Angeles, Atlanta, Baltimore, Philly, and I forgot one. Oh my gosh, I almost got them and I don't even have notes. But yesterday on Driver Nation had a great live show. Jason Terry and I and Tom Kelly, the station owner and manager. We always do that. It's always on 7 to 9 Eastern on tncradio.live. It's called Driver Nation, and it's call-in shows. Come on, guys, join us. It's fun. What else? This is dropping, and tomorrow is Mother's Day, so say hi to your mothers, send some love, do what you're gonna do. But we are gonna still do a quick Sunday FUNDAY live. It will just be a little bit more brief. So yeah, but here's my piece of news. I'm gonna work on one today. So here we go. We're gonna talk about where Lyft and Uber are right now, because the first quarter's earnings reports came out, and I'm sure that a lot of you guys saw that, the 5.9 billion, 5.6 billion, depending on where you read it, but I see it more as 5.9. I've read a lot of the articles now, and 5.6 is, for whatever reason, makes it sound a little softer, fine, but the things that were added in to make it to 5.9 seemed legitimate to me. So, but I want to there's a really good article out, and I'm going to share it in the notes here. I don't have it up on uberlyftdrivers.com. Normally I say I do have it up on uberlyftdrivers.com. However, go check out uberlyftdrivers.com and just read some articles, subscribe to the newsletter. Also, if you aren't subscribed to the YouTube channel, please do. Looking to grow that a bit. But so I will post this direct link, and it's got these graphs. So it's 6 different points between comparisons between Lyft and Uber right now. So I'll put it in the show notes of this, but I want you guys we'll just kind of walk through it together a little bit right now. So we know that on Wednesday was like one of the worst performance stock market days in the past. I'm not really sure. Just awful, right? So Lyft shares plummeted almost 30% and barely crept back up. Almost everything really plummeted on Wednesday. But Uber didn't too much, which was weird. But here's something to talk about. So both companies have plunged since they went public in 2019. Okay, I think we're all aware of that, but maybe we need to bring up to speed today on where it really is. But while Uber has dropped 35% of its IPO value, Lyft has dropped 70% of its IPO value. So take that. That's part one. Okay, that's part one of the 6 parts we're going to talk about, and then you can go look at the article. Again, it's got these graphs that really kind of also just detail what I'm talking about here, but we'll just bullet point through it because I think it's some super important stuff to know that's going on. Let's see, number 2. So Uber's revenue compared to Lyft's is like ridiculous. And on this scale, again, if you go look at this article on this scale, it has Uber mobility, which means it's not talking about micro mobility and stuff. It's talking about um, rideshare, and so it's got Uber mobility, so Uber rideshare, Uber delivery, which that's should be in the revenue chart. I get it, and then it has a line total for Uber total when you total those two togethers, the revenue and where it's at. And Lyft is just revenues in the millions of dollars at Uber's global ride hail business crashed harder than at Lyft, which only operates in the U.S. and Canada, but not even Canada really anymore. I don't even know where Lyft is there, but now is accelerating at a fast rate. Also Uber Eats. So Uber Eats is well up. Neither of these companies are looking strong, by the way. So I just want to make that clear. Let's see the next one. Uber. Uber has the ride hail service is more profitable. Obviously, they have more customers. They also, yeah, I mean, but I would think that between now that they've both done the price jump and Lyft has tailored it back a little bit, and they kind of both pay the drivers the same, but since Uber stayed up on their higher end a little bit, that's not surprising to me. When you look at this graph, it's pretty off. I mean, it looks like, wow. I mean, you can just see the Lyft failures again and again and again. And yet, for so long, people were saying that might be the bet, but it is just looking bad for Lyft. So this was interesting. So Uber ride hail prices outstrip Lyft's. So obviously that goes to what I just said, that Uber's charging more than Lyft. They kind of both went up, not during the pandemic, but about 10 to 12 months into the pandemic, as we started to come out a little, to not only to bring drivers and passengers back, but they just decided it was finally time for the first time to raise the rates. So they both did. Lyft has tried to bring that back down. Uber a little, but not much. They still are trying to price that tier out higher. And here's something that was said that I'd like to get your comments on. So this is the part where this is part 4 of 6, and please comment in the comments below what you have to say about this if you do rideshare or if you're familiar with it. The companies also are saying different driver pay. So Uber said that those on the road for more than 20 hours a week, so drivers working more than 20 hours a week of rideshare, on average, we're earning $39 an hour during that first quarter of reports that we're going through right now this year. $39 an hour for people that work more than 20 hours on the platform. Lyft, for the same margins, 20 hours an hour, is saying that their reported earnings for drivers who work more than 20 hours in a week, so same standards, was $24 including tips. And it doesn't say including tips with the Uber one, but it is. And it also, both of them have the surcharge in there too of 55, whatever is going on with the surcharge, which might not even be going on now. But I found that very interesting. So I'm very interested to hear, because I know people who drive for both, and I know people who often pick Lyft, even when I've found Lyft to be a dud. For years, I picked Lyft. I thought it was the better company. I thought it was going to be better pay for a longer time, and it was for years. I was onboarded with both. But right now they're saying the difference is $15 an hour. That if you're working more than 20 hours a week as a rideshare driver in your city, the average across the country is $39 an hour for Uber, and it's $24 an hour for Lyft. So I would like to hear on that if you guys have anything to say. Let's see. Uber's active user base is growing way faster than Lyft's. In fact, when you guys go look at this article, when you scroll down to the 5th one and you see Uber's active user base shows faster growth, that chart, you'll just be blown. I guess you can see it coming, but you'll be a little blown away, I think. Lyft and Uber in the United States and Canada, we're only going to talk about that for a second. So in the first quarter, Lyft is 13% below the pre-pandemic levels of active user growth. So people on the platform who are using it and people coming on the platform who are using it, not old accounts, but that they're down 13% pre-pandemic. Uber is claiming that they are 23% up from pre-pandemic. So I don't know if that Uber report is really, I don't know if it's 23, like they're saying that they've seen more growth in active users by 23% of pre-pandemic. I'm wondering if a lot of those are, I wonder if there's some criteria I need to find in here that says like after 6 months made Uber users inactive, which made like almost everybody inactive, but it would also have to apply to Lyft during the pandemic. Maybe that's part of this. I'm not seeing it, but I will take a look again because it has to be something like that. And then this one's a little interesting though. Both companies significantly cut cash burn over the pandemic. Yeah, they did, because what do they have to burn cash on? They're not tech companies. They don't do anything where they're introducing a new technology or anything crazy. They've sold off all those junk departments, but Uber's shrinking cash pile is still larger than Lyft's. But when you look at this trend, it's not like this is the only one where you don't see much of the pain on Lyft, but you see Uber's. They're going down fast on their cash. So I don't know. Please comment on this, especially if you're doing rideshare. Like, what are you noticing, especially on that number 4 one? And again, the link will be in the show notes. So please check it out and leave some comments. Let me know what you think. And that was 13 minutes of news, but under. All right, guys. See you tomorrow. And make sure to call your moms and happy Mother's Day. And we will see you tomorrow on the Sunday Fun Day, even if it's just brief. Peace.